A surge of major fundraising activity across global markets is putting a spotlight on how investors are responding to changing interest rate conditions and growing demand for capital. From technology giants issuing massive bond offerings to record setting activity on Canadian equity markets, companies are tapping investors at a time when borrowing costs and rate expectations remain in flux across major economies. At the same time, central banks in different regions are moving in opposite directions on monetary policy, adding further uncertainty to the outlook for debt and equity markets. I'm now joined by Brendan Caldwell, director of Caldwell Securities Limited, for more insight into what these trends are signaling. Brendan, thank you so much for the time today.
Great to be here, Theresa.
Now, Amazon recently issued a record $14 billion bond offering in Canada, just 1 month after Alphabet set the previous record to fund AI infrastructure. Does strong demand signal investor confidence in long-term growth, or are companies being pushed to take on more debt in a higher rate environment?
Well, there's a few things going on there. I mean, there are lots of ways for companies to raise money, debt and or equity. Uh, Now, with equity, it's historically the most expensive form of raising capital because you are selling to the public the future earnings of a company from now till eternity. So debt at least has a finite quantity to it. There's a fixed interest rate and a fixed limited period of time. But yeah, so yes, it's interesting that these mega giants, Amazon, Alphabet, can raise big money here in Canada uh, because it is well that much money is floating around in the system. I suppose is encouraging, especially because the government amount of government debt has continued to increase at, I'm not sure, unprecedented rates, but certainly at alarming rates given the size of the federal and provincial debts at this point in time. So what you're looking at is a crowding out effect that I find it curious. I mean, big companies, I mean, Amazon, like government-sized countries, can still raise money, but I wonder to what extent less powerful entities can access capital markets in quite the same way. Uh, there, I mean, if you could lend to the federal government at, say, 3 or 4%, well, that mean one thing. If you can lend to Amazon uh, or to Alphabet at 4 or 5%, okay. But at what rate does a much smaller company need to pay to be able to borrow, to be able to finance those activities? So it's encouraging in one way that there is the money available, but I wonder if it's not a question of the big getting bigger, or the giant getting more gianty, for want of a better term. I also think it's interesting, given the stock market levels, that they are going with debt rather than equity. Because as I began by saying, equity is the most expensive form of capital, but at the right price, it does make sense, particularly when markets have been on such a tear.
And on another record breaking note, Apotex, a Canadian generic pharmaceutical company, recently raised $1.3 billion in the largest IPO on the TSX since 2021 and the largest life science IPO ever on the TSX. Does this signal that Canada's equity markets are starting to recover, or are investors mainly attracted to the strength of the company itself?
Well, how to begin? I think that it's a combination of factors, but if I had to weight them, I'd say 60-40 in terms of there hasn't been another major equity issue in Canada since, what's the number you quoted? 2021, 2022.
Yeah, 21.
So, okay, then it's been half a decade since Canada has had a major equity issue, or at least one of this size. That's shocking, bordering on appalling. It does speak to the state of our capital markets that uh, there's so little demand for um, there's so little demand uh, to raise money in the public markets that they're not seen as attractive. So uh, companies are either staying private a lot longer, or, and I think this is somewhat even worse, not going public in Canada. They're going, if to the extent that the Canadian companies are becoming public issuers, they're doing it in the United States, and so too that's where the private much of the private equity funding is. So it's a touch on the distressing side that we have such great people, great technology, great innovation, but have such a hard time getting it to the next level and enabling Canadians to participate because an equity issue done in Canada, Canadians get to participate to a much greater degree than a Canadian company issuing stock in the States, where the hurdles, the barriers to entry, let alone pre-IPO, but certainly post-IPO or at the IPO, at the initial public offering, are much, much higher. So um, cautiously optimistic. It would be nice to see if there are some follow-on issues of other companies. But Apotex, because of its unique positioning as a generic drug manufacturer and this unique time in history with Ozempic going off patent in Canada, might be the exception that proves the rule.
And the Bank of Canada has paused its overnight rate at 2.25%, but 10-year bond yields remain elevated. Why are long-term yields staying high, and what does that say about inflation and rate expectations ahead?
Means they're big. Inflation and rate expectations are big. Um, I mean, we saw today, this morning, the inflation rate of Canada was 3.2%, and the expected rate was 3%. I think that the Bank of Canada's target is 2%, but it seems unlikely to impossible for the bank to raise rates because inflation right now is not being driven by too much demand. We are in a recession in Canada and have been for probably longer than the numbers have indicated. So if you raise rates into an existing recession, you're just going to make it worse. You can raise rates as a central bank into a demand driven, that is too much demand driven inflationary environment. But what we have here is a supply shock. There's too little oil, too little energy, and it's driving up prices. So to raise rates uh, into a into a supply driven inflationary environment, I think could take a bad problem and make it worse. So between now and the end of the year, I do not expect rates to rise either in Canada or, despite what the U.S. Central bank governors have said, there won't be any, in my opinion, interest rate increases in the United States because it would just be very bad for the midterm elections and the current president. But what that means is inflation's probably going to remain unchecked unless bigger, probably fiscal measures are taken to address what is, I think, not just a short-term cyclical problem, but a longer-term, bigger secular problem.
Brendan, thank you so much for the time. We appreciate it.
Thank you, Theresa.